So guys, fair warning, this video may be a bit longer than my usual videos. However, I'm going to be discussing stocks that I've never talked about before on the channel. So you definitely want to stick around all the way through because there's going to be a ton of value in this video. Now, over the last few weeks of volatility, many stocks are down massive. The indexes took a hit. The Nasdaq specifically entered correction territory, but there are many more stocks they're down 30, 40, 50% or more. So in this video, I really want to walk through some of these stocks that I personally keep an eye on my watch list. I think that a lot of them are good businesses. Some of them may still be a little expensive. However, some of them, they are dirt cheap today. And I'm going to skip over common ones that I discussed recently on the channel, like Amazon, Salesforce, Peloton, Splunk. These ones we talk enough about on the channel, so we'll leave it to kind of new names here. There's a couple of names we've discussed before that you guys know I like, but for the most part, these are new companies that we don't spend a lot of time discussing. But I do want you guys to know that by no means are these recommendations. These are not, stock picks you should go out and buy today. These are just ideas for you to go out, do some research on, and see, hey, does it make sense to possibly buy into this company after you did your own due diligence? So I'll also throw in some of my opinions and tidbits here and there. We're going to look at analyst ratings. It's going to be a ton of value in this video, like I said. So all I ask in return is hit that like button if you find this video useful. And if we can get 500 likes on this video, I'll create another video with more riskier but more rewarding potential stocks. Anyways, enough chatter, let's get into the video. All right, so jumping over to our screen here, what I'm gonna do is actually show you the chart for each stock that I'm looking at today. And I'm gonna show you the TipRank analyst rating as well, just to give you an idea of what the potential upside could be or what Wall Street really believes it could be. So first off, kicking off our list is Snowflake. This is a recent IPO back in 2019. The stock boomed right off the IPO. And ever since its highs early December, it's down 50%, and we're pretty much sitting at its lows right now. We're pretty much at the price of where the stock IPO'd at many months ago. So if you've been looking for kind of like a data play, you like the data analytics space, you like stocks like Splunk, for example, this is another one to look into. It's definitely a very interesting business. Still a bit expensive for my taste, but after a 50% dip, definitely much closer to a more reasonable valuation here at around $220 per share. Now, what do analysts have to say about this? Let's take a look. Snowflake. Jumping over, we see that analysts actually have a pretty good upside for the stock. 33.4% is what the consensus is. Most analysts believe there's at least a 20% upside. Some of the more bullish ones say that it's 40-50% upside. Regardless, Snowflake does seem to be oversold here. Even though it is an expensive stock generally, the market seems to be willing to pay a premium for this regardless, and this is the first stock I wanted to cover. Next up on our list is Zscaler. This is one we haven't really discussed too much on the channel, but it's another very interesting play for tech. Down at its lows around 28.5%, starting to bounce back a little bit, but we're still well off the highs of near $230 per share. We're in the 180s now. Now, this is another business that I think, probably will do completely fine over the long term. It's a security play, definitely a sector that's required. You can see here last time we pulled back, we came close to this moving average, but then we bounced, moved higher. This could be something similar right now. We came back, found some support here. We could be ready for a bounce higher. Let's take a look at what analysts have to say about Zscaler. Zscaler is undervalued apparently by around 28%. That's the upside that analysts see. And you can see the more bullish analysts see closer to a high 30%, mid 30% upside. Seems to be pretty consistent throughout that, most of them say it's a buy or a hold. No one really thinks it's a sell. So this is another one I want to throw up on your radar. Next up is Corsair Gaming. This is a popular one on YouTube recently. At its lows a couple of weeks ago, down 45%. Definitely a very interesting business. One that, if you compare it to its biggest rival, Logitech, it definitely looks undervalued. Market may be misinterpreting the future for this stock. And to me, it looks like we're starting to see some sort of bottom here in this stock. We are looking oversold. It's kind of been moving sideways for the last few weeks, and we may see a bounce if the overall market recovers back up to like the mid 40s, high 40s per share in pretty short period of time. Now, in terms of what analysts have to say here for Corsair Gaming, we can see the upside is pretty big, guys. It's 51% is what analysts believe, close to $50 per share. So this is definitely one that has a very high potential to do quite well. I actually disclosed that I made a position in Corsair quite a few weeks ago, well before it became popular here on YouTube, because this stock looked very cheap just based on what it has done in the last year, what I think it'll do in the next year, and when I compare it to its peers. So this is definitely one that I personally like, and I may buy more if we dip a lot lower, but right now I'm just continuing to hold my position. Moving on, we go back to our charts here. One of my favorites, Beyond Meat. Now, what am I doing with this one? Right now, not too much. You can see my cost basis is where this line is, around the 130s or so. The low 130s actually, so I'm still technically profitable on this company, guys. And what I like about this stock is that it's kind of a predictable mover. You'll see that every time we come back, we test this green line here, which is the 50 moving average. We test it. Sometimes we break a bit below it. You know, here we created a double bottom and then we moved higher. Now again, we're kind of hovering around this green line here. And I think sooner or later, the stock will rebound and move much higher. This is definitely one that I like. Down 36% at its lows. If you look at what analysts have to say, this one's a bit mixed. Okay, so I'm going to warn you, this one's a bit mixed. The upside is about 3.8%. Not, you know, a whole lot of optimism here with this name. Very mixed. Analysts at JP Morgan thinks it's a sell, big downside. Analysts at some other companies believe that there's huge upside. I'm more with this camp here with these guys. You know, I think it can be a $200 plus stock in the next year. So this is definitely one that I want to keep a close eye on, and I have a pretty big position built in. Moving on, let's talk about Stoneco. Stoneco is a financial type company, I believe, in South America, and it's definitely gained a lot of popularity. And you can see, just like other fintech plays, ever since the lows in March, it has rebounded massively. It's gone from $15, $16 per share to, you know, almost hitting $100 per share just a few weeks ago. But now it's corrected. It's coming back to a pretty good level here, guys. It'll probably find some support around this. I don't see it going much lower than $60 per share. And from that point on, we probably will see some sort of bounce in this stock. Analysts overall, I haven't really taken a look at this yet, so I'll be looking at this for the first time. Okay, 36% upside. That's pretty good. Not too shabby. Again, mixed here. Some analysts believe that it's, you know, 60, 70% upside, 50% upside. Some believe only 20. But regardless, seems like the consensus here is that this is a undervalued stock today. Moving on. GoodRx. This one is one that I had an eye on ever since this, I believe, was when Amazon announced they're getting in, or it might have been this right here. I wanted to get this for a quick swing play, but I never ended up opening up position here. I deployed my cash elsewhere. But this one, you know, recovered quite nicely, almost got back to its previous highs. And then over the last few weeks, with the market sell-off, has just been taking a nosedive. And now we're back to pretty much the lowest prices we've seen, down 43%. Now, this is a fairly new stock, so there's not a lot of technicals to look at here. Let's look at what analysts have to say. And overall, they see, you know, a $50 price target seems to be a consensus here. Mostly bullish analysts, you know, one bearish one, a couple holds, but, you know, for the most part, $50, 36% upside. GoodRx is definitely one that I have a close eye on. I'm going to be looking more into as well. Unity is the next stock I want to talk about. We discussed this briefly on the channel before. ARK has been buying this one heavily, down 50% on its lows a couple of weeks ago. Definitely a very interesting company. Kind of expensive valuation if I'm being completely honest though. But still a very interesting business. In terms of what analysts have to say, they believe that this stock is almost 50% undervalued. It should be an upside of 50% according to analysts. The more bullish ones see 60-70% upside, which is huge, guys. Huge. The current price is just about $100 per share. They see this going to 170, 160, 170, around that range. this could definitely be one of the best winners over the next few years as the market starts to recover. I think this one got beaten down a little too much. It's definitely a very interesting player in its space. Also definitely very expensive stock in my opinion, but the market does dictate the price. They seem to be okay with the valuation right now, and I think at this point we've found some support and we could be ready for some moves higher. All right, moving on. Docusign is our next stock, and this one, not really want to probably buy, but I definitely want to bring this up, show you guys that there are some pretty big names that have pulled back, ones that have done really well in 2020, started to pull back. This one's kind of been moving sideways ever since summer, slowly trickling higher. Now we've corrected back to prices back from July, which is quite a significant pullback, and we found support at the 50 moving average on the weekly, which is a strong level of support for this stock. In terms of what analysts have to say about Docusign, they believe that this stock is 35% undervalued. 35% upside here. The more bullish analysts see a little bit higher, 40-45%. But regardless, the consensus is that this is a strong buy. This is an undervalued stock according to Wall Street. Next up is one I've discussed on the channel quite a bit, Alteryx. So I did have a position in Alteryx before. I sold out of this stock with a pretty decent profit before their last earnings. I didn't want to hold the risk through earnings. And ever since then, it's kind of been just down, down, down. But I think at this point, down 57%, it's definitely at its lows or pretty dang close to its lows. It's pretty much made a double bottom here, which is a good technical pattern. And it should see some sort of recovery and a nice bounce higher. So there could be massive, massive upside with this stock. Definitely one I want to look into again for a swing play. I like the technical setup. I like the support. I like the double bottom. Everything's pointing to me that this is a bottomed out stock. Now, this is going to blow your mind. Alteryx could see an upside of 76%. This is huge. If you look at some of the analysts here, some of them believe over 100% upside. You don't see this very often in stocks, guys. Pretty decent company as well. This is not like this random sketch company that just come out of nowhere. It's a pretty established business, some good customers that they have. And yeah, this one could be a pretty big winner. I wouldn't necessarily go all in on this because there is some risk still with the business. But just looking at the charts, it's kind of hard to ignore this one at these prices. Next up, we have Zillow, the real estate giant here, down 41% at its lows. Still probably has a little bit of room to correct, but definitely, much cheaper, much more attractive than it was a few weeks ago, or over $200 per share. Now, Zillow, take a look at this stock. Around a 30% upside, a little over 32.29% upside. Not too bad. Analysts still see that this one has room to grow. The most recent analysts here have put their price targets pretty high on the stock, some pretty good upside. The older ones from like 6-7 months ago see a lot of downside, but I guess they have to kind of reiterate, and a lot has changed in the last 6-7 months, so I would suspect that they'll probably be more in line with these analysts here. So overall, I think Zillow has some pretty good opportunity ahead of it, and I think this dip here could be a good buying opportunity. All right, we're about halfway through, guys. We're gonna keep chugging along here. Ansys is our next stock. And this one is one we've never discussed on the channel. I've never seen it really discussed on YouTube. I think it's a very interesting business, a very consistent stock. If you just look at its history here, comes back to this orange 100 moving average quite often. And when it does, it bounces and moves higher. Right now, we're at the 50 moving average, but we seem to have found some support here. I think this one could probably rebound in a pretty short period of time. This one is definitely one I have on my radar. It's been a company I've been looking into. 15% upside, so not a huge amount of upside in the stock, but I think it's a relatively safe company based on what I've looked at so far. Definitely one you want to add to your list to do more due diligence on. Next up, we have Elastic NV. This is one I've discussed a few times. Competitor to Splunk and Datadog, got hit pretty hard, around 38% down, close to its lows. Technicals look pretty good. We may come down to around $100 to test that and move higher. But I think this stock is another one that's severely undervalued. and analysts see, around 60% upside here on this stock. It's definitely going to be one that I think will perform extremely well over the long term. You can see some of the more recent analysts here in the last 22, 23 days or so have 60, 70% upside price targets on this. So definitely one you want to look into further if you're into these high growth type companies. So what do we have next? Oh man, this one is a fan favorite, Palantir Technologies. And I'll tell you this, I'm not buying Palantir right now, but I wanted to bring this up to you guys because it is down 50%, 40%. At its lows down 55%. So definitely one you want to look into if this is a business you like. You can see here there's some huge selling pressure. I believe this is when the lockup expires, so tons of people have sold out. So I guess the worst could be behind this. It's definitely found some sort of floor right here around the 23.75 range. It's bounced off this quite a bit, so this could be the floor for the stock and we could move higher from here. And analysts here on Palantir seem to be kind of mixed. Like, this is not huge upside for some analysts, pretty big upside for others, 64% for Jeffries. So kind of have to really understand this business to see if this can really be a big winner for you. Consensus is just under 6% here for the future of this stock, but I know a lot of you guys are ultra bullish on Palantir. This could be $50 stock plus, you believe, in the next year or two. I'm not sure if I'm fully on board with that, but hey, I wanted to bring this up to you guys so you know where the stock sits and you know that it's down quite a bit from its highs, so maybe a buying opportunity. Next up, we have Zoom Video, another one I probably won't be buying, down close to 50%, but it's come down to a very interesting technical level, the 50 moving average here. And usually when it comes down to these levels is when I definitely have an eye on these type of stocks. High mover, massive growth in 2020. You can see massive volume as well came into this stock. And it's kind of just trickled off over the last few months, but maybe this is the bottom and we start recovering once again. Zoom, in terms of what analysts have to say, they are bullish. 50% upside on this stock, close to $500 price target. Today we're sitting at around $300. So definitely some good upside in this business. Some see 60, 70% upside, so even bullish. But even like the sell analyst here from a few days ago from Credit Suisse, they still have a upside of 16%, even though they have a sell rating. So that's an interesting one. But overall, Zoom, definitely one you want to look into. Is definitely the winner in video conferencing, definitely the go forward platform, even though there are a lot of competitors in this space. But yeah, Zoom Communications, that's our next stock. Moving on, Neo. This is a fan favorite as well, down 52% at its lows. Highly volatile name, highly expensive name, a stock that I personally own. I don't plan to add any more at these prices, guys, but definitely one you want to look into because it came down to a very strong technical level and bounced pretty much to the T on this level, implying that there is a good floor and support down there. Now, Neo, in terms of what analysts have to say, they see 52% upside on the stock, which is absolutely monstrous. For the most part, analysts believe this is a buy. There's like 86% upside, 60% upside, 88% upside. There's one analyst that has downside here from Jeffries, but for the most part, the consensus here is that this is a buy. All right, we're just getting into our last few here, guys. Okta, this is another one I've never discussed on the channel, down 32% at its lows. Again, one that has a very good technical setup. It's come down to its 50 moving average, which it has in the past a couple of times, found support and then moved higher. We could move a bit lower here to the 180s and test this orange line, which is the 100 moving average. Wouldn't be surprised if we did, but regardless, I think we're closer to the bottom than we are to the top here. So could see a recovery, nice recovery in the stock, back to close to $300 per share in fairly short order. Now, Okta is one that analysts are pretty, unanimous on. No one has a sell rating, 29% upside, $276 price target. Generally, everyone's pretty bullish on this one. A lot of them have at least a 10% upside. This one's pretty close to 10%, but general consensus, this is definitely a name that should do well over the coming months. Next up, we have MongoDB. MongoDB is a company that does databases, a very interesting business, one I've followed for a very long time. can't justify its valuation right now, but after a 33% haircut, definitely one that, you know, has my attention. Again, good technical setup, come back to the 50 moving average. And if we look at what the analysts think here on Wall Street, they believe this is still undervalued. You know, 30% upside is possible, close to $400 per share is possible. And this is pretty unanimous as well, with just one guy here saying that it's a hold, you know, $300 price target, which is pretty close to where the stock is today. But I think that overall, this is definitely going to be a long-term winner. I think that this is actually a possible acquisition target as well. Maybe Amazon or Salesforce or Microsoft or Google, one of those companies I think could acquire this at some point. It is getting kind of expensive now, but definitely one to keep an eye on. Okay, into our last few guys here. LMND, Lemonade. This one's down 57% a couple of weeks ago. It's recovered a little bit since then. Fairly new stock, so not much to go on the technicals here, but you know, from a haircut of almost $200 now to under $100, should catch your attention a little bit to look into. Lemonade upside is around 5%, so not really one that analysts are too bullish on. It's kind of mixed, similar to Palantir here. You know, some see massive downside, some see massive upside. I'm kind of mixed on this. I've looked into Lemonade, didn't really feel it's a business that I have high conviction in, so I didn't really open up position in this. But you know, now that we're under $100, I'll take a look at it once again and see what I find and see if this is actually worth, you know, dabbling a little bit of cash into. Next up is Cloudera. This one is down 37%. This one has been kind of a not a great performer ever since it went public back in 2017. It's, you know, been moving down and started moving higher. Looks like we have a reversal of the trend. So you can see here we kind of started making lower lows, and now we're kind of making higher highs. So this could be the lowest point. We bounce back up, high, bounce. That could be the movement going forward. I think there's a pretty high probability of that happening. So technical setup looks pretty good on this one. Cloudera. So here's Cloudera, and analysts believe 23% upside in this stock. This is one I would say is a little higher risk compared to the other names we've talked about. Valuation may make sense. However, it's a pretty complicated business to understand. So make sure you understand this before buying into the stock. Do your own due diligence, like I always say. But I think that this is one to keep an eye on. Could be a nice swing trade, if anything. Good technical setup. This one probably will move higher in the coming months. Now, next up, we have PagerDuty. And this is one I talked about back when it was in its 20s. I know a lot of guys in the VIP group actually bought into this stock, and they've seen massive gains, you know, almost pretty much a double up in their investments over the last few months. Now, it's pulled back quite a bit since, and this could be another buying opportunity in this stock. It's 42% down at its lows. It's recovered since then. It looks very oversold to me. It found support at a very strong level. So this, you know, is setting itself up for some higher moves. In terms of what analysts have to say, PagerDuty analysts see around a 27% upside in this stock. You can see here it's pretty unanimous that there's a lot of bullish analysts on this name. The most bullish coming yesterday, actually. 42% upside, $59 price target. So definitely one you want to keep an eye on. Add this to your watch list. Look into this business a bit more. Very simple business. Another takeover target, guys. I think this one could also be something that a big data analytics company could take over. Possibly even Salesforce could look into buying this company. So that could be a different angle to play this stock as well. But anyways, if you like the information I showed you on here, I'm using a website called TipRanks. Link in the description down below. You can find this info for pretty much any stock that you have. And for the charting, I'm using a website called TradingView. Again, link description down below. Both these services are great. I use these on a daily basis, and they definitely help me with, you know, looking into my analysis, getting some more information on stocks I follow or interested in, and helps me create videos like this. Anyways, guys, hope this video was useful. And again, if we get 500 likes on this video, I will create another video with some high risk, high reward plays, you know, higher risk stocks that are down massively. Don't typically talk about on the channel, but I will if you guys are able to get that like challenge done. Anyways, thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.